Ladies and gentlemen, the next session is a product showcase. And we have ONDC in a box. Moderated by Suhail Sheikh, Head Ecosystems and Partnerships, HSBC. And the speakers are, may I please request everyone to come on stage? Ladies and gentlemen, it's moderated by Suhail Sheikh, Heads Ecosystem and Partnerships at HSBC. Aman Mahajan, Senior Vice President, HSBC. Vivek Mohapatra, Assistant Vice President, Growth and Adoption, Protean. And Shayak Mazumder, Co-Founder and CEO, Adya. Please give them a big round of applause, ladies and gentlemen.
Hey, hi everyone. So, my name is Suhail, and I've got colleagues of mine. Can you hear us? Yes, this is better. Okay, hi everyone. I'm Suhail. I've got colleagues from my side. We've got Aman, we've got Vivek, and we've got Shayak. What we're going to be showcasing to you is a product on ONDC. So what's ONDC? ONDC is Open Network for Digital Commerce. It's a next game-changing initiative as part of the digital public infrastructure for our country. It's first of its kind in the world. It rides on open protocols. I'm sure you guys have seen through this, gone through this. What we're going to be doing is we'll run a small video that will help you get through a view about what ONDC is and what ONDC in a box is. The way we've constructed this is along with the partners. It's got multiple elements into it as a solution. Along with the partners, we've put together the entire solution into a box, which in a plug-and-play manner, a customer can use. So can we have the video, please? So we'll quickly run the video.
The increasing internet penetration spurred India's digital commerce movement as businesses looked for new ways to sell. Omni-channel business models then rose to significance with the importance of creating seamless, integrated consumer journeys across multiple channels. With the rising usage of technology-enabled solutions and increasing internet penetration, transitioning to an open network could expand opportunities across the digital commerce landscape in India. Open Network for Digital Commerce, ONDC, is a Government of India initiative to democratize the digital commerce space and help buyers and sellers to participate on the platform and unbundle different business activities to multiple service providers. With unbundling making it possible to offer discrete microservices, ONDC could also enable specialization, allowing each participant to operate from a position of strength, innovation, and uniqueness, unleashing multiple use cases like these. To enable your business on the ONDC network, HSBC has collaborated with select ONDC ecosystem partners to offer a comprehensive one-stop shop solution for ONDC enablement. HSBC's ONDC in a box offers a comprehensive proposition to meet your business needs and requirements. Interesting, isn't it? But what does ONDC in a box include of? HSBC's ONDC in a box facilitates ONDC modules, banking services, and omni-channel management solutions. The proposition is further enhanced with HSBC's state-of-the-art digital payment solutions for your businesses by providing a seamless API-enabled banking journey on ONDC with the select ecosystem partners. The proposition supports direct-to-customer or D2C, hyperlocal retail, business-to-business, B2B, and many more business models. And this comes with exciting offers for you, provided by our ecosystem partners. Truly comprehensive, right? Great! And there's more. We have enlisted a few use cases wherein the proposition curated along with our partners could be relevant for you, such as digitizing distribution chains, empowering D2C businesses, channeling sales through affiliates, rendering customer base into buyer apps, creating robust supply chains, and many more.
Okay, thanks a lot. So, instead of going through everything on the presentation, the video actually covered a lot of the material, a lot of the details. So we're going to quickly run through the, some of the use cases that we really want to showcase. So, okay, this is the first use case that we spoke about. Lot of customers, lot of OEMs, brands, manufacturers have distribution chains. This is the next UPI moment from a payments point of view. It's going to completely transform the way distribution happens. Traditionally, sellers used to, or brands or OEMs used to sell it to distributors to retailers, and then to consumers. It's going to start moving in a reverse direction. So that's a big use case which manufacturers, OEMs, and brands will adopt. That's what we wanted to showcase. The next is, the whole D2C aspect. A lot of companies, specifically post-COVID, moved into D2C, which is direct to consumer. A lot of customers ONDC will completely revolutionize the way direct to consumers will happen. You will see a lot of adoption on direct to consumer. And that's how we envisage and the use cases that we are going to be looking at. The next use case is sales through channel affiliates. A lot of people sell through channels. Even the financial services also sells through affiliates. I can give you a small example. A large manufacturer, an auto manufacturer selling through, what really is a affiliate is typically an influencer, a mechanic who's influencing the purchase of a spare part, can actually get enabled on ONDC to really empower and sell through ONDC. And the last one is, rendering a huge, so customers, and this includes for banks as well, how can they leverage on their existing customer base or organizations which have huge customer base, how can they really enable this, leverage this customer base to get it enabled on ONDC. So that's in summary. I'm open for questions and happy to answer them.
You need a microphone?
Yeah, there's one.
Hi, my name is Keyur Parekh. I'm from TVS Credit. Wanted to understand, in ONDC, is there a way in which financiers can aggregate
Absolutely.
with multiple ONDC providers
Absolutely.
on the
So
supply side or supplier app?
Absolutely. Absolutely, it can happen. So the way it works, it's structured into B2C, B2B, B2B2C. That's how the structure is, which gets layered with financial services across. So ONDC is in the process of launching financial services. As part of phase 1, they will be launching credit, insurance, and mutual funds. Credit is both on personal loan, on individuals, as well as corporates, where customers can buy. So let me give you an example. How it will work is, if the buyer is purchasing, he can actually choose to avail credit on the go to buy that transaction. So that can be one use case. A buyer can specifically go and search for credit on the protocol, and he can avail credit facilities. Similarly, on the seller side, for the purchase, he can also avail credit in a similar manner, both on the transaction. So it can be layered across both the transaction flow as well as individually or standalone credit facilities as well.
When is this
Suhail, can I add something to that?
Yeah, please.
Okay, so what is happening here is, on one hand, you have the regulated entities, which is you, right? Those that are lenders that are willing to provide loans, credits. So the first two workflows that ONDC has launched is personal loan and unsecured business loan. These two have already been launched. The first set of companies are already building. So on ONDC, how it works is, you have a seller app and you have a buyer app. A buyer app is where somebody will go and ask for a loan. These are sachetized loans, very small ticket loans, quick 2-minute, 5-minute disbursals. So the buyer, in this case, somebody who's seeking a loan, goes on the app, says I want to get so-and-so loan. What the buyer app does is takes a series of consent so that their asset data can be acquired, consent so that their liability data can be acquired, their KYC can be acquired. But the buyer app doesn't get access to that. The buyer app passes on the consent to the lenders. The lenders use that consent to get the data from the account aggregators, from CIBIL, or whatever bureau framework you're using, from the KYC framework. Once you get everything, your algorithm runs, you provide a loan as in a offer to that particular customer. That customer got an instant offer from multiple different providers there. Now the customer can choose who they want to take, what amount do they want. Supposing that customer chose option A, but not the amount that the option A has given, a lower amount. That will get sanctioned, and of course, a series of further consents like eKYC, e-mandate, e-natch, e-sign, etc. will happen. Up to the disbursal is on the protocol. So the disbursal will happen. Once the disbursal happens, after that, the recovery, as in the repayment, is not on the protocol. And also, if there are any grievances, etc., that's also on the protocol. Over to Suhail.
Yeah, so that's a journey which Shayak just gave you, which was on the individual. However, this can be built for corporates also, the business side of it, as he mentioned, saying it, unsecured business loans, and it supports all dimensions, large to large corporate, large to small, small to small, and small to large as well.
What is the process to, let's say, be a part of some of these pilots?
Sorry?
Should I answer that?
What is the process to be a part of the pilot?
So the process is three-pronged. One, you have to go to Suhail and team. They'll put you in touch with the right partners who will help you with the technology. Two, you have to go to ONDC and sign up in order to be a provider of loans there. For that, you need to have a certain few things like a RE, NBFC license you already need to have. And third is you need to then go through the testing process and go live. That's basically your process.
And one last question. So, because there are multiple seller apps and multiple buyer apps, is there a way by which an NBFC can get access to all apps, or it has to be one-on-one?
That's the whole beauty of ONDC. It is open network. You register in one, everyone gets access to everything.
So I can become a capital provider
Absolutely.
on all buyer platforms or seller platforms.
So you are visible on all buyer apps, all seller apps. That's the beauty of...
Provided that app has a credit option.
Right.
But yes, wherever there is a credit option and you are sending a response to that request, the user will see you.
Got it. Thanks.
Hi, my name is Rohan. So my question is more related to the commerce part. While we see that ONDC in a box is a multi-level solution to the commerce segment, many organizations fail to achieve its peak because of the return leg problem they face, which tunes in the numbers of around more than 40%. How is ONDC in a box proposition going to solve the return problem where companies do burn a lot of money and also fail to retain the customers after a prolonged period of time?
Yeah, let me take that.
A little closer.
So the reverse logistic piece that you're talking about is indeed a problem when it comes to the digital commerce world today. Today for ONDC is building an integrated grievance management system which would help or which would actually pass the onus to the buyer and the seller applications to get the grievances or the issues resolved at their end within a certain TAT, obviously. If that does not work out, there would also be online dispute resolution entities that would be assigned by ONDC themselves who will come in if it's not solved at a seller or a buyer application level. That's how we are looking to solve on the reverse logistic piece.
Thank you.
Can I add something?
Yeah, please.
Okay. So reverse logistics is a problem. Why? It is a problem under two circumstances. In certain categories, like fashion, etc., the reverse logistics is as high as about 30%, right? But in other categories, there's no reverse logistics. Like in food and beverage, you normally don't see reverse logistics unless there's something genuinely damaging about that particular product. So reverse logistics is, at the end of the day, category specific, but determined by the platform through which you're selling. Now, what is ONDC doing about this is, one, it has the same set of solutions that normal commerce has. But the beauty of ONDC is, it actually allows each app to choose how they want to handle it. Now, supposing I'm building a buyer app on ONDC, and you're building a seller app on ONDC, You decide your products are non-returnable, non-cancelable. I'm going to show that. And the buyer, if they accept it, they're going to buy that. Acha. Supposing you decided your products are cancelable, but within a certain time frame. That is what I will show. So it is, at the end of the day, each transaction is unique. Each product transaction is unique. A seller can determine whether they want to make it returnable or cancelable and what terms and conditions apply. It is not determined by the platform itself. So since there's no single platform in between, it's a protocol, it connects everything.
Yeah, hi, sorry.
Hi, hello. I'm Jigar Shah from TVS Credit as well. I wanted your view on the cost of acquisition. The cost of acquisition that a lender would have to incur by being on this platform. Because, for every buyer who wants to take a loan, basically that inquiry will flow to all lenders. For every such inquiry, they'll have to hit the CIBIL and various other checks that they have to do. And therefore, ultimately, what is that that will attract the lenders also is how do we bring this down?
No, so be rest assured. I don't have the numbers handy as of now unless Shayak knows the numbers. But it is the lowest in the industry in terms of the cost of acquisition. I don't want to take names, but I can talk about commerce. The commission charged by the platform can go as high as 60% of the sale price. ONDC operates on a fraction in terms of the cost itself.
I'll add something to what Suhail said. So two things. In commerce, as Suhail said, if you add up supply chain cost, the marketing cost, the platform commission, all of which you're bound to pay, otherwise you don't come on page one, the total cost goes up all the way from 45 to 50%. I'm coming to the credit part. On the credit part, the lender has to do about 5 calls to 5 separate things. So you do the AA call, you do the bureau call, you do the KYC call. Now, at the end of the day, yes, by the way, this is a soft pull. So the cost is lower. But even then, you do pay out. But then you pay out because this is a competitive marketplace. So your acquisition cost overall goes down, although the cost of calls goes up. Because you're not actually acquiring the lead is coming walking to you. So there is no marketing cost or anything to acquire the lead. The lead is happening through different buyer platforms. But your cost of calls goes up because the number of calls you do to get the same number of customers is more. Because this is not a captive customer for you.
So that's any other questions, or we can, Nidhi, we can call it off. Sure.
As a lender, there will be several filters, right, to be able to screen some customers that are coming in. So the basically directly correlated.
Not filters. You'll get the same data that everybody will get. You'll get your algorithm will determine based on that data points what is the risk premium associated with that particular seeker and what do you want to offer to them and whether they fall within your threshold or not.
Okay.
So you will capture the data points from that. Now remember, the same data is available to everybody. What you do with the data.
And basis the data point, you can throw the price which you want to offer him.
Understood. Yeah. So underwriting will have to be aligned to that. The data that we receive.
You will need to integrate with your algos. Yes.
Correct.
So it will be a backend will run a BRE.
Hi, I'm Himanshu. Apologies if you have covered this before, but what are the timelines that you're thinking in terms of bringing investment services like mutual funds or debt or gold?
That's already live.
So, but as in terms of blue paper and actually making it live by
investments in mutual funds.
No. So on financial services, yes. What's gone live is loans and insurance, and it is so. We'll have 4 solutions which will go live on financial services: loans, insurance, mutual funds, and
the FASTag is the 4th one.
FASTag is the so these are the ones which will be rolled out. Personal loans and unsecured business loans is what is being rolled out as of now. Mutual funds is work in progress. So soon it will be up and running.
The financial protocol is work in progress. All the protocols are work in progress. Financial protocol, the first set of offerings are out. The next set will be next month. They're coming.
So the way we look at this is basically trade on commerce, which is the forward flow. Someone is buying from someone. So someone is buying from a seller. The reverse flow is money. and ONDC will cover everything in terms of trade, commerce, settlement, and reverse flows.
We are done?
Okay, done. Thanks a lot. Thanks, everyone.
Ladies and gentlemen, please give them a big round of applause. Thank you.